Tesla is one of the most innovative and successful companies in the world, and everyone knows this. But can it ever achieve 50% growth? When will this happen, and how will it happen? Join us as we explore the possibility of a Tesla-dominated future.
I think we're noticing the company changing the narrative towards maybe not making as many cars, but now pivoting towards selling charging infrastructure, power electronics, batteries, and then, yes, FSD and autonomy. That's the real moneymaker anyway. We think investors are kind of missing the forest for the trees here.
That's really interesting, Tom, because, even here in the UK, if I do a road trip with an electric car, the supercharging stations are so much more efficient. And then you have the other ones where you have these long, long lines. So it's clear that there is demand for that kind of thing. But then what does Tesla look like? Take me 10 years down the road for this company. Are we talking about a completely different...
Tesla is one of the world's biggest companies, but how big can it get? It's got a goal of reaching 50% growth year over year. And to do this, the automaker plans to produce 1.8 million vehicles this year, and thereby remain ahead of the long-term 50% compound annual growth rate. But is that even achievable? That's the question we're about to answer. Today, we're going to look into the factors that drive Tesla's performance, the challenges it faces, and the opportunities it has to expand upon to reach its market share and revenue targets. We'll also analyze how Tesla compares to competition, and what strategies it can use to stay ahead of the game. If you're interested in learning more about Tesla and its future prospects, then stay tuned and watch until the end. Let's get started.
More on the impact of the stalling EV market and whether it really is stalling. Let's bring in Kevin Roberts, Director of Industry Insights and Analytics at Car Gurus. Is the market for electric vehicles stalling, Kevin, when sales are up as much as you say they are?
Yes and no. So we're in a situation now where the data can basically tell you whatever story you're looking to tell. So EV sales are definitely up. However, not all EVs are selling at the same rate. So we're also seeing rising inventory levels out there, which is suggesting the market might not be as willing to buy every EV that's being produced right now.
So the inventories are going up in part because I guess maybe some of the demand has come off, the froth in demand has come off, but also isn't it because the supply chain issues have been solved?
Yeah, so we're seeing rising new inventory across the board for all powertrain options. We're also seeing more EV makes and models available, which is also increasing that. And we're also coming from a really low base of EV inventory in 2022. So all of that is really helping to increase some of these percentage numbers that you're seeing.
Hey, Kevin, help us make some sense of this. On Tesla's call a couple weeks ago, we know that there's been these price decreases, and Elon and crew seems to think there's this price elasticity that should exist, and these cars are much cheaper, yet obviously financing costs are much higher. But even if you look year over year, with the price cuts, they're not that much more expensive with financing rates that much higher. What's going on with this whole idea that you lower prices a lot and there's still not increased demand as it relates to Tesla?
I just don't think we're there to price parity completely with internal combustion engines out there. Looking at average listing price data from Car Gurus today, month end October, average listing price of a new EV was 28% higher than an internal combustion engine vehicle. So there still is some pricing premium out there. And I think that's really giving consumers pause when looking towards EVs with some of the potential issues regarding charging availability and range anxiety.
Over the past decades, the demand for EVs has increased tremendously, and now more than ever, people are buying and using electric vehicles. Most Tesla bulls believe that the demand in the use of an electric vehicle is going to have a positive effect on Tesla car sales and demand. Tesla has been in the EV business for years, and during that time, it's expanded its markets and increased sales through improved technology and scaling of its revenue. With the current and expected trend in the use of electric vehicles, what will the future be like for EV company stocks, especially Tesla? Can they truly achieve a 50% growth rate? Let's find out. Hey guys, welcome back to Tesla Tomorrow. Earlier this year, Tesla announced that it was looking to build a battery plant in the United States, in what would most likely be a controversial arrangement with Tesla's dominant electric vehicle battery manufacturer. The automaker discussed plans involving CATL and the White House in an effort to build the battery plant in Texas to supply its EV assembly plant there. Some experts claim that Tesla wants to pursue a deal similar to one that was recently announced by Ford. Also, with the battery maker CATL, to construct a plant wholly owned by the US automaker. Like with that Ford deal, Tesla would also own and operate the factory while licensing the technology from CATL. Before we carry on though, guys, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla wants to make lower cost electric vehicles, and a key part of that plan is to fend off its competition. To do that, Tesla needs to invest in low-cost cutting-edge battery tech to see that vision through. A cheaper car would be an effective way to entice new customers to Tesla, and consequently create a path to achieving a 50% growth. There's also a strong demand for EVs, and according to CEO Gerber Kawasaki Wealth and Investment Management, Ross Gerber, well, there is an increase in demand for electric vehicles at a rate that's never been seen, and it's very true. About 2.4 million electric vehicles were delivered in mainland China in the first of this year, which was about 26% of all car sales in the country. In that same period in 2021, electric car sales were only 10% of China's car sales, indicating an increased demand for electric vehicles in the country. In a previous interview with CNBC, Ross Gerber noted that there is no need to be bearish on the idea of electric vehicles, since this is fast becoming the new trend. The switch to electric cars is happening at a faster rate, and a lot of people, as well as countries, are beginning to see the benefits in using clean energy. Countries like Australia have enforced policies to promote the safe use and sale of electric cars in these countries. This shows that more people are starting to consider EVs, and that's a good thing, seeing that governments around the world are likely to adopt similar policies to this in the future. Moreover, oil prices have become unstable in the past years, and it is likely that these prices will go higher in the coming years. Several analysts are also very optimistic about the future of the EV market, and many believe that this will be of great benefit to Tesla, since it's a leading EV company in the world and it's got a wider market compared to other EV makers. Tesla also already has its high demand for its electric cars, and it will eventually have more when the expected surge and demand in electric cars comes through. According to Pierre Ferragu, since electric cars have become popular, market shares for Tesla and its competition may be dictated by their ability to ramp up production volumes. Coupled with the increased demand for Tesla cars, the automaker is also trying to cut costs, especially with its batteries. Although some experts have already claimed that Tesla is experiencing some difficulties in making its battery deals a reality, the automaker still has a high chance of achieving that milestone. Tesla has led this electric vehicle industry for years, and it will have to keep outselling its peers while maintaining those high margins in order to stay ahead of the game. Also, if Tesla is able to reduce the cost of its batteries, then this will mean a lot of things. It is evident that the demand for clean energy infrastructures will be high over the next few years, and so Tesla is well positioned to benefit greatly from this increased demand. The automaker is actively pursuing its goal of producing millions of EVs per year. Even Elon Musk revealed the company's goal of reaching 20 million cars produced annually by 2030. According to Musk, this goal is as a result of the desire to create a remarkable record in sustainable energy and electrification by replacing at least 1% of the over 2 billion fleets of cars and trucks in the world per year. That's a big task for Tesla, no doubt, but with its better production capacity, technological advancement, and more gigafactories in operation, the EV maker should be able to pull this off. But what do you think? Let us know down below, and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.